And I wonder what it's going to take to bring that down and turn to profitability.
Tesla will generate sales of more than $100 billion this year.
All that and more. So let's get to it. Tesla stock is up in the pre-market a little over 1%, currently sitting at $201.21 per share. Look at this resilience. I mean, I happened to purchase a couple of shares yesterday at $190 or so, but honestly, I thought I'd be able to get to purchase them just a little bit cheaper. Who knows what the immediate future has in store for TSLA? But color me shocked that it's still trading around $200 per share right now. Year to date, the stock is still down around 20%. I suppose it could be worse.
Lucid CEO Peter Rawlinson. Peter, it's great to have you on. Walk me through the quarter here, because there was quite a bit to work with and quite a bit of news. But let's start with the adjusted loss. Let's start with the fact that revenue came in better than expected, and you did reaffirm your production guidance. Walk me through the quarter.
Indeed, we're on the back of a second successive quarter of record deliveries. We delivered nearly 2,400 cars.
2,400, 2,400 cars. Okay.
And this outsold significantly our core competitors, namely the storied German brands. And we're seeing strong orders continuing throughout this quarter.
Okay. So pricing, is that something you've been able to continue to hold steady and toe the line on? And I ask that knowing that more broadly across the EV space, we've seen softer demand in recent months.
Well, we've been able to introduce progressively more affordable versions of our cars. Our car starts now at $69,900 with the Air Pure, which is the most energy efficient car in the world ever. And so I think this is finding a whole new range of purchasers. And also we're debunking the myth that our cars are unaffordable.
I don't know if you're debunking anything. The cars are becoming a little bit more affordable for consumers, but I'm still sure they're costing you an arm and a leg.
As Phil LeBeau was reporting when he broke down the earnings just a short while ago, he said if you take the adjusted loss and you calculate that against deliveries, it comes out to about 270,000 per vehicle that's being lost.
God damn, that's a whole lot of bread being lost for each vehicle sold. Forgive me, Peter, but something tells me this is unsustainable.
And I wonder what it's going to take to bring that down and turn to profitability.
In a word, it's going to take scale, Morgan. This is all about scale. We're growing our order book for Lucid Air. We're about to launch our SUV, the Lucid Gravity, which is going to have a massively more significant TAM. And we're already well on the way in our engineering of our mid-sized platform. We're also building out a factory in Saudi Arabia. And we're really very close to have completed a major program of expansion in our factory in Arizona, where we've vertically integrated our powertrain into the same roof. We've vertically integrated our logistics center, and we've brought even stampings in-house. So make no mistake, a lot of this expenditure is going in long-term investment for the future. This is a long-term play.
A very long-term play. The path to profitability is definitely not on a paved road. That is way too much money to be losing per car. And maybe, just maybe, the Gravity will be popular enough in a higher volume than what they're currently doing. Let's just say, I've got my doubts.
Then if you take a look at some of the EV makers, with the exception of Rivian, which is higher today, we're seeing weakness. Lucid is lower. The Chinese EV makers, take a look. NIO, XPeng, Li, BYD, U.S. listed shares all trading lower today as well. GM and Ford also contributing to weakness today as well.
Monday was not a pleasant day to be in the markets. A whole lot of red. But you know my motto, I buy on red days.
Tesla continues to be one of the most argued about names on the street. I was just looking at the analyst breakdown. It always just blows my mind how evenly split it is. We know there's usually a little bit more bulls in general in the market, but this is about as even across the buy, hold, and sell as you can find.
Yes, unlike the other Magnificent Seven stocks, which are all very, which skew very bullish in terms of the analyst breakdown, Tesla actually has more holds than buys right now. If you take a look, there's 40% of hold ratings and about 36% buy ratings. So pretty even, as you said, but a little bit more in terms of the hold count. Given the fact that Tesla has come off of its highs recently, now down 20% year to date, it's actually trading above or below the median price target of 217.50, but still pretty close. It was trading above not too long ago. There was a podcast that Elon Musk was on over the weekend with Lex Friedman. It was part of an 8-hour podcast where he interviews multiple leaders. And I listened to a little bit, but I have to give credit to Al Root over at Barron's, who clearly listened a bit closer than I did. But he pointed out that Elon Musk actually gave some kind of positive commentary in terms of numbers for Tesla. He said that Tesla will generate sales of more than $100 billion this year.
What? That's exactly what I have in my 2024 model. More vehicle deliveries. Continued growth of the energy division. I see nothing but brighter days ahead for Tesla, the company.
Second half, then first half of the year, also higher than 2023, which amounted to about $97 billion. So that seems to be getting overshadowed by some of these other headlines today, and also this overall strength that we're seeing in the market. But I do think that's important to point out as well.
Okay, I totally do as well, and I completely think that's been overshadowed. I mean, I could not agree more. I feel like, hey, I guess who knows if they'll hit that target, as they've been one to make promises, perhaps. Sometimes they can't always fulfill as quickly as we'd hope, but that's still objectively a good piece of news. So we'll take that for what we will, and appreciate you bringing that piece of information for us. Caroline Woods, Senior Markets Correspondent. As always, appreciate all of the great Tesla insight.
In conclusion, it's gonna be tough sledding for Peter Rawlinson and the team over there at Lucid for the foreseeable future. And it's not to say that they won't be able to do it. But when you're looking at the other startups and even the legacy auto manufacturers, there's something different about these companies when you try to compare them to Tesla. Simply, they're not like us. They talk about reaching scale. Tesla's already at scale. They talk about what it's going to take to reach profitability. Tesla plans to make money hand over fist. Around $100 billion this year? Name another auto manufacturer that's doing that. Go ahead. I'll wait. If you ask any of these auto manufacturers how their autonomy efforts are going, they'll give you blank stares. While Tesla is logging as many autonomous miles as everyone else combined. My conviction in TSLA has never been higher. Why? This ain't as easy as Tesla makes it look. That's all I've got for you today. Be easy. Peace.